in the last 3 months, in the month of April, we had this reciprocal tariff, and during our second Saturday meeting, market was very weak because market fell very sharply in response to the Trump's announcement of reciprocal tariff. In the month of May, that is last month, that India-Pakistan tension was there, and second Saturday morning we were very skeptical, but in the afternoon around 5 o'clock, the news came that the war has ended. So, and this month, if you see, means that the Iran-Israel war has started just 2 days back, and that tension is going on now. So next month what will happen is that the July 9th, the reciprocal tariff 90-day deadline is ending. So we don't know what Trump is going to do it, and next month, second Saturday meeting, we will see the impact on that. So every month some issues are coming, but still market is going up, market is climbing the wall of worry. Not only Indian market, globally if you see, many markets are doing well. US S&P 500 just 2% away from all-time high, Nasdaq just 2% away from all-time high, and European markets, London market is at all-time high, FTSE. DAX is just a few percentage point from away from all-time high. Indian markets around 6% away from all-time high. So in spite of all these news flows and other events, market is going up, and many individual stocks are going up very sharply. So if you could be able to pick up the stock, well, means can make decent amount of money. And on the news flow, if you see that the domestic macro data is very positive. Whatever news we are getting from India, it is very positive. Be it inflation, RBI action, GDP data, all these events are very positive. So only negative news we are getting from is from globally. Now this Iran-Israel tension is there. Because of that, the only way we impact because of Iran-Israel tension is on crude oil price going up. So already $10 it has gone up from $64 to $74. So some analysts like JP Morgan and all, they have told that if Iran decides, means they can stop this crude oil flow from Gulf, and which may take up the crude oil prices to more than $120. That's what they have told it. Their analysis says that. We have to see how this war is going to end. Yesterday, Trump told that this war may continue for 1 week, he told. See, what is surprising is that between these two countries, there is 2,000 kilometers gap is there between Israel and Iran. Still, both Israel is attacking them very precisely. So the complete war game has changed between what we saw 40-50 years back and now. So now from here onwards, it is entirely dependent on the technology advancement. Soldiers and all not much needed now. So air defense system, then missile attack, drone attack. So mostly it will depend upon the technology advancement in electronics. That is what is going to help each country to defend themselves. And because of this, some opportunity will be available as an investor also, because some companies which are engaged in this type of manufacturing items, they may benefit from it. And we have to see which company is going to benefit, and we have to invest in that. And broader market is very good. Global news flows are mixed. On macro data, even US inflation has come down. That is also very surprising to many. This geopolitical tension and this tariff issues, that is only making the market participants little nervous. And in the last 1 month, if you see, Nifty and Sensex, not much movement is there, whereas mid cap and BSE small cap, good activity is there. Mid cap has gone up by nearly 9% and small cap by 14%. In fact, many individual stocks from in the last April, May and the July first week, many stocks has gone up by more than 50 to 75%. Many individual stocks has gone up. April first week we had the low. From there, from April lows, if you see that, even some stocks have gone up more than 100% also. So such the movement is happening in the market. Unless you have conviction, means it would be very difficult to hold on the shares when market was falling. But after we sold, what will happen? The stock price will go up very sharply. So only conviction and some knowledge about the market will help us to hold the stock. And this is the news that Israel has attacked Iran. And what the Israel has done is that they mainly targeted many nuclear sites in Iran, and they also targeted key army and nuclear division chiefs. So they precisely making the attack from 2,300 kilometers away from them, and they are exactly striking the target. So that is the beauty of the current war. It is happening. The impact is that oil price has immediately gone up from $64 to $74, and only from oil price shooting up we will get affected. Other than that, we are not going to affect directly from this Iran-Israel war. So this JP Morgan, they have told that this oil prices will touch $120 if Iran closes the Strait of Hormuz. One important place is there where Iran has a control on that. Through that only most of the oil ships passes through. The oil from Kuwait, Saudi Arabia and all passes through that path only. The Iran has that control on it. Suppose if Iran decides to close that, means definitely oil prices will go up. But they cannot close it forever. Immediately US will involve in that. But even if they pass it for few weeks, means then it will be possible for oil price to go to $120. So approximately around 20% of world oil passes through this Strait of Hormuz. See, this is Iran, and this is the place what they are mentioning, Strait of Hormuz. This is a very important small path is there. So Kuwait and all, their ships and all will pass only through this only, it will come up. Similarly, this UAE, their oil also come, their ships also come through this only. It's just approximately 21 miles are there, where this Iran has a control part of it. Oman also has some control on it. But most of this Kuwait oil, even Saudi Arabia oil, even though Saudi Arabia has put some pipelines, their ships are going through it. Suppose if they stop ships there, means then Saudi Arabia has to transport oil through pipeline, but Kuwait, UAE and all, no other option. Their ships has to go through this only, and it will come up. It will come towards Asian countries like India and other Asian countries. Suppose Iran decides to cut this point, means then globally around 20% of oil flow will get choked. Ships cannot come away from it. And because of that only JP Morgan is saying that oil price will go to $120. It is not going to be permanent, but still that is one risk, short-term risk is there. As we know that because of this geopolitical tension, so one sector which has benefited very strongly is the defense sector. So last year we had a huge rally in defense stocks, then a lot of stocks fell by 50-60%. For example, all the shipping companies, Cochin Shipyard, then GRSC, Garden Rich Shipbuilding, and many other defense stocks which rallied a lot last year. During the correction between October and March, they fell more than 50% from their peaks. But then after that, when this Pakistan-India issue came, again they started going up, and most of the stocks crossed previous high. Companies like BEL last time we recommended, and it had done phenomenally well. And some of the shipping stocks, shipbuilding companies, which we recommended in the past, Garden Reach, then Cochin Shipyard, they have also rallied a lot. And if you see that many defense stocks, the small companies, mid cap and small cap companies are there, Astra Micro, Peras Defense, then another Apollo Micro, all these companies are rallied a lot, small defense related companies. And we feel that the defense stocks will continue to do well because of this geopolitical tension, because of every country trying to build a defense products. Because the main thing is that now European Union, they also are hiked their defense budget very sharply up. They are going to build their defense product. As we know that, as I told previously, now the defense system has completely changed now. Mostly now it is depend upon this air defense system, missile attack and drone attack. So they have to completely buy all new products and they have to build the stock. So because of that, many companies will get advantage order for the next 5 years, 10 years. It won't be, it's a high gestation period products. All these defense products and all. If you give order now, means it will take 2 years, 3 years, 4 years to complete the project. Even the shipbuilding and all, it will take 5 to 10 years. Big ships and all will take 5 to 10 years to build the ship. So most countries is going to hike their defense budget, and many companies are going to benefit from it. But we have to be very careful because valuations are very high, and at current prices we have to do proper due diligence and buy it. So one reason why we did not recommend some of the smaller companies is that this Apollo Micro, Paras Defense and all is that they don't have their cash flow, even data pattern where they give products for the space and defense. They don't have their cash flows. Only the PSU defense companies like BEL, Hindustan Aeronautics, then this Gordon Reach, Mazdan Dock, Cochin Shipyard. These PSU defense companies, they don't have this cash flow issues because the government will give money in advance to them, and and with that money only they execute the project. So they don't have any debt. Whereas the smaller companies, Paras Defense and all, they have huge inventory, have huge receivables, and cash flow is very bad. That means they have to either raise money through equity issuance or they have to raise debt. So by doing that, what will happen is that the balance sheet and the return ratios will get distorted. That is why we haven't recommended these stocks. So one stock which we recommended in this space was the Centum Electronics. They don't have much issue in that. They get advance from Space Research Organization for executing the project, similarly from others. And cash flow issue is relatively much better in Centum Electronics. That is the reason why among small cap space we recommended that company. A lot of momentum is there. We have to be very careful because if we take a wrong stock and it doesn't work out, means stock can easily fall by 40-50%. Most of the stocks are trading at very high valuations and the cash flow is very bad. And if you see that defense manufacturing has tripled from 5 billion to 15 billion in the last 10 years in our country. Similarly, exports has increased from 21,000 crores to export is set to increase. This is what our defense minister Rajnath Singh has told recently. That currently our exports are around 21,000 crores. It is likely to increase to 50,000 crores, more than 150% in the next 4 years. Export is going to increase. And defense budget, our budget, if you see that it has increased to 6.8, more than doubled that even our domestic defense budget also. But one big market where most of them are targeting is the exports market. But some restriction is there on doing exports. Suppose our enemy country gives order, means companies cannot accept that order. Companies which are working against India, if they give order, means we can't supply to them. So some restriction is there on exports. Only countries which are very friendly to our country only companies can do exports. So that one restriction is there. But even that many companies are getting good order. Even shipbuilding companies are getting very good order from European countries. Recently Gordon Reach, they got order from a German order, they have got it. So they are getting it now. So next 5 to 10 years the defense manufacturing will do well, and we have to pick the correct stock. And this is what I told. In spite of all this bad news, Nifty and Sensex is just 6% away from all-time high. And Dow Jones, if you see, yesterday's data I have to adjust it, around 6% away from all-time high. Nasdaq just 2%. S&P also just 2% away from all-time high. And FTSE and DAX, both European markets, they are also very near to all-time high. Only market which is lagging and very far away from all-time high is this Chinese market, where it is down 79% away from all-time high, and Hang Seng, where most of the Chinese stocks are listed, and it is down by 37%. So only Chinese markets are sharply down from their all-time high. All other markets globally, most of the big markets, most of them are near to all-time high, in spite of all the tariff issues and all this geopolitical tension. Markets are doing well. So that is what everyone is getting puzzled. Why markets are near to all-time high? There are so many uncertainties there, but still market is going up. So market always like this. It will be very puzzling. We don't have answer to many questions, but we have to go with the market. India VIX, that also has cooled down a lot. So two spikes we had it in the last 3 months. One is because of this reciprocal tariff. India VIX went up very sharply to more than 20. Then again it cooled down. Then Trump gave 90-day pause window. It cooled down. Then we had this Pakistan, India, Indo-Pak tension. It came. Again it went to more than 20. Now again it has cooled down. Yesterday after this Israel-Iran issue, now it is near to 15. So more than 20, it fell to 13 to 14 range. Now it has again climbed up. So this is what it indicates is that market is becoming normal. That's what it indicates. India VIX cooling down, and many data coming from our domestic is extremely positive. If we see that our Q4 domestic GDP data, Q4 it was 7.4. Market was expecting, most of the participants were expecting around 6.8 only, but the growth came at 7.4. So it was very surprising, and it came well above market participants' expectation, Q4 GDP growth. And overall for the last full year it is 6.5. In the next year, RBI projection was that in the next year also they are expecting 6.5%, they are expecting full year. Q1 6.5, Q2 6.7, like that they have 4 quarters. This is what the RBI projection is, and overall they are expecting 6.5% growth for next year also. But many times RBI used to revise it. Maybe they may be waiting for the monsoon to see how it pans out, and then they will revise it. As of now, the RBI projection is 6.5. So the other positive data, domestic positive data is this inflation. The CPI inflation has eased to a very comfortable level. Now it is 2.8. So just 7 months back it was 6.2. So the RBI comfort level was is 4 to 6%. So 7 months back it was 6.2. It climbed up very sharply during the festive season, September, October time. At that time everyone was negative. From there it started gradually cooling down. Now it is 2.82%, well below the RBI comfort level. And GST collection also last month it was very surprising. It came to 2 lakhs. So month on month generally this April historically is a very strong month. So we should not compare to month on month, because April historically if you see, April will always give a huge collection to government because of the seasonality factor. But year on year if you see, last year it was 1.72 lakh tax collection was there. This year it is 2 lakhs, almost 16% growth is there. Whereas previous and all, if you see that September, October and all, it was 6%, 8.9, 8.57 like that. First time we are seeing more than 15% growth in GST collection. After many months, October 2022 only, we had more than 15% GST collection. After that, more than 2.5 years, now our GST collection has gone up to 16.4. The other positive is the monsoon has started very early. In the month of May, almost throughout India, if we see that overall rainfall is almost double what we used to get as an average. So overall all India rainfall in the month of May was very good. It is more than double. And this time the official monsoon has arrived 1 week before normal schedule. Normal schedule is generally used to be June 1st, and May last week we got that monsoon. Now almost 50% of India is covered by monsoon. But after that what happened was June till 12th, June 1st to 12th, some break was there. And now the break has gone up. Now from here on it is expected that the rainfall to get well, and other parts of the India also to get by monsoon. And July is expected to be a very productive month. That is what the global agencies and both the IMD and SkyMet also predicting, forecasting. And overall the monsoon is expected to be very good in the current season 2025. Southwest monsoon is going to be very good. IMD has forecasted 106% and of normal rainfall. SkyMet slightly lower, 104 they have forecasted. So both agencies has done very well. And recent RBI policy meeting, they have cut the repo rate very sharply by 50 basis point. So market, everyone was expecting 25 basis point cut in repo rate, whereas they have cut by 50 basis point to 5.5%. They have cut it. So it's a bit surprising to many economists also. So RBI has become very aggressive in rate cut, and they have front loaded and they have cut the rate cut by 50 basis point. So overall if you see that from 6.5 in this current rate cut cycle, from 6.5 they have cut to 5.5, 100 basis point overall they have cut the rate. And RBI also told that from here on the rate cut will depend upon the data. That means that very unlikely from here on rate cut will come. Only after 6 months only we can expect, if the data is very supportive means then the rate cut will happen. Only after 6 months only it will happen. And RBI, it looks like that they are very supportive for growth. Whatever they can do, they have done it. Another interesting move they have done in the current RBI policy meet is the CRR cut. So the rate cut, most of the participants were expecting 25. Some of the participants expected even 50 basis point rate cut also. But what no one was expected was the CRR cut by 100 basis point. So they have cut from 4 to 3, 100 basis point they have cut in. But it will come from September onwards only. On September, 25 basis point CRR cut, October another 25, and November first week another 25, and November last week another 25 basis point cut. So they have coincided the CRR cut rate cycle during the festive season, because October, November is the huge festive season. Lot of festivities used to happen, and lot of credit growth also used to happen during that time. That is why they have coincided the rate CRR cut during that period. But it is extremely positive, because almost 2.5 lakh crore credit is going to be released into the system. Otherwise, the money will be lying idle with the bank. They can't lend it. Now they will get some interest on it, 7% or 8%. If they lend money, means at least they will get minimum 8%. They will get interest on 2.5 lakh crore. That will be margin boosting for the banks. Because of sharp rate cut, in the first 2 quarters, we are expecting that bank results may not be that good. But after that, post that, the CRR cut and deposit rates coming down, from second half onwards, bank will get huge benefit from the RBI recent move. But NBFCs will get benefit immediately, because their borrowing rate will come down immediately. And RBI very supportive, as I in the last 2-3 meetings I am telling that RBI is extremely supporting for growth, because the current RBI governor is from the finance ministry. So they have good understanding with the finance ministry, and it looks like a coordinated work happening between RBI and the finance ministry. And government spending also very high in the month of April and May. So last year what happened was that the first 2 quarters GDP growth was very low, mainly because the government spending was low due to elections coincided during that period. Government did not spend much money from April onwards in the first 6 months. The first 3 months, because of that election, it gone. Then the next ministry formation and their settlement, it took another 1 quarter. Only from second half onwards, only government started spending more money. Only 4th quarter, government spent huge amount of money. And in this current financial year, initially itself they started spending good money. April, the capex spending by the government was very huge, and that will boost the GDP data. So on one hand, RBI is doing whatever possible, they are doing it. On monetary side, they have cut the repo rates by almost 100 basis point. Then CRR reduction, they have done it. And whatever possible, RBI has done it for supporting economic growth. Also, many times they have done an open market operation and injected huge liquidity, and there is sufficient liquidity in the system which will support growth. And this is also a very interesting chart, where many people in the stock market used to track it. And this is the capex spending of a government. This is the state government. Then this is the central government. Then it is the private capex. And if you see that between 2017 to 22, the private capex was almost standstill. So 2 years it is gone because of COVID, but during 17, 18, 19, the private capex did not happen at all. That's why many stocks in the capital goods segments did extremely badly during that period. But after that, once the capex started, the private capex picked up. Now if you see from 5.5 in FY21, it has now in the last year, FY25 recently concluded, it is 11 lakh crore, almost doubled. Whereas government, if you see that, because of lack of private capex, government did a heavy lifting during this period. Every year they increased it, particularly in the last 2 years, this FY23 post-COVID time, if you see, 5.9 to 7.4 lakh crore, 7.4 to 9.5, almost a huge jump is there. Then the last year they did 10 lakh crore, 10.5 lakh crore they did. But what we are expecting is that there's an increase in the private capex. No, that is would be very helpful to the economy. At least in the government, whatever part they have done it. Now it is up to the private to do more capex. I feel it will happen now, because if you see that for example, you take chemical sector, government is putting lot of anti-dumping duty on chemical sector to boost domestic production. For example, a company called Make Money Organics, many of them will be knowing it. They have one titanium dioxide project, they did it, but in the last 2 years they could not able to manufacture much because of huge Chinese dumping of that product. Their capacity was running at 20%, 30% like that. Now recently government has put an anti-dumping duty on titanium dioxide, so companies could not able to import. If they import means they have to pay anti-dumping duty, price is higher than the domestic production. So what will happen, they will start buying from this company Make Money Organics the titanium dioxide, and management is saying that their capex, their capacity utilization of titanium dioxide project will go from 20 to 30% to 70% in the next 2 years. So like that, many chemicals government is putting anti-dumping duty to boost domestic production, and because of that more industries will come, which means that more private capex to happen in coming year. Recently this rare earth magnet issue has happened. China is asking so many questions to give rare earth magnet to us, not only to India, throughout the other countries. Actually, though the name is rare earth, it is not very rare. You can easily manufacture it. The problem is that it will take some time. 1 year it will take to put the plant to put the refining of this rare materials. So 1 year time will happen, but government is going to give PLI. I feel that some companies is going to put plant here, so that we no need to depend upon China. But it will take 1 year, so 1 year disruption will be there. And it looks that the government is very conformly doing many things. They want to boost Indian production. We should not depend on other countries for many products. That's what government is trying to do now. And because of that, the private capex will go up. The other thing is that interest rate has come down, which will boost corporates to take loans. Right now the balance sheets are extremely strong, and they can take lot of loans also. And that's what we are expecting, because RBI is very supportive for economic growth, and government also will help, because if you government, if they spend lot of money, means naturally it will boost economy, and private people also will get a boosting, and they will spend lot of money. And the other thing is that that recently the income tax changes in the last budget, almost 1 lakh crore they have 1 lakh crore boost they have given to the income tax payee in the current financial year, which means that consumption also is going to go up. So overall, seeing all the efforts that RBI reducing interest rates, government spending lot of money, then consumers because of income tax changes, the consumption is going to go up. So all this thing, if you calculate and see, it means that we are going to see good economic growth. And US tariff update. So 90 days this reciprocal tariff pass window, that is going to close on July 9th. So next second Saturday meeting we will come to know what has happened, because there is no point in predicting what he will do, because every day he is saying, Trump is saying something where no one can able to predict it, what is going to happen. And the US is negotiating with multiple countries for trade agreement. So now the market is awaiting India-US interim trade agreement. So the final trade agreement with any country will take many months. It will take even 1 or 2 years also. But interim trade agreement can happen. India-US, already the talks are over. Now we have to see what US going to say it. So two news I have read it. One is the Reuters news, where they have told very positively that this interim trade talk has gone up very well. Whereas another article in Mint, they have told very negatively. US is very adamant on few products, and they have put a deadline on India that if you wish to take this, you do it, otherwise we can leave it. Like that one article has come. So we don't know which is true. So for our market to go up to the next level, suppose if any positive news comes on this India-US interim trade agreement, means their market may see a boost. And 2 days back, US told that this China tariff has been fixed at 55% and there is no need to further talk. Like that Trump has told, but we haven't heard till now from China side, we haven't heard anything from them. So this tariff, by next month it will get clear what is going to happen. And Q4 earnings, and if you see that the sales, I feel that the fourth quarter is much better than what we have seen in the previous quarter, because the first half was very bad. Q1, Q2 is the period where we made a bottom. Q3 is relatively better and Q4 is far better. And sales has gone up by 7%, net profit by 14%. This is on the broader market. There is a result of 2,800 companies nearly. When compared to last year, even though the growth is lower, when compared to previous 2 quarters, it is much better. And Nifty companies, if you see in the Q4, revenue has gone up by 7%, profit is up by 10%. But this profit 10% is mainly because of other income of ITC hotels, ITC Limited. ITC has posted huge profits because of the demerger of the ITC hotels. And also Bharti Airtel, they have made one extraordinary income in that. That's why the profit has gone up by 10%. Otherwise, it is near to 2% only. And whereas what was positive in many stocks was the mid and small cap companies. In that, we find it a lot of good results in that, and many stocks went up also, posted results also. So the broader markets were seeing action. But just 1 year back, what was happening? No, many of them were recommending to buy Nifty stocks because the valuation is relatively lower. But unfortunately, the growth is also lower in Nifty stocks. Whereas in broader stocks, the valuation was higher, broader market, but results also far better than the Nifty. So market has some sense of what is going on overall sectors, and that is why valuations were higher when compared to Nifty companies. So whenever market goes up, one segment which will get very active is this capital market related companies. So immediately many people will be waiting for exit, and if you see that in the last 10 days, every day some promoters or private equity players are capitalizing the market rally. Yesterday this Jubilant Group, they sold shares, and day before yesterday Reliance sold Asian Paints shares. So like that, promoters and private equity players are capitalizing this market rally. Every day some big deal is happening, and buyers, if you see who are them, is domestic institutions, mainly mutual funds, they are the buyers. So 1 month back, one article was there that 2.4 lakh crore is lying in domestic mutual funds ideally, and that money will help the market not to fall much, because whenever market falls, they will come and buy. But the problem is that daily some 5,000 crores, 8,000 crores, if some big sellers comes, means most of the money will be absorbed by them only. ITC, largest shareholder, BAT, they sold it 6-7 months back, one tranche they sold it. Now recently they sold another tranche of ITC shares. Bharti Airtel, one big block deal happened where Singtel sold it. Like that, on a daily basis, some big deal is happening. On every side, if you see that who is the buyer, means it is only domestic institutions. FIs are not buying heavily. Only the mutual funds are buying heavily in that. Even yesterday, this Jubilant shares, three companies they sold it. Jubilant Food, Jubilant Pharma, then Jubilant Incriva. Most of the buyers were Indian mutual funds only. Promoters were exiting and mutual funds were buying. Day before yesterday, Reliance sold this Asian Paints shares and buyer to the tune of 7,700 crores. They bought it in 2007, they bought it and exited now. And who are the buyers? It is the SBI mutual fund, they bought it. 7,800 crores worth of Asian Paint, they bought it. So the active promoter PE exit, all exit is given by the domestic institutions only. So the IPO market also expected to gain steam. Some big IPOs we can expect it. Some 20,000 crore IPO, 30,000 crore IPO, like that we can expect. FII cash market action, if you see that June it was negative, it is negative. FIIs, they are not buying much. In the October to February they were huge sellers. March also in the first half they sold heavily. After that in the last only they started buying. That is why it turned positive. April was flat and May some buying came. But June again it turned to negative as on yesterday it is. So big FI buying also not there. Even in today's business line, you can see that one article has come that FIs are holding huge short in the market. They expect market to come down. Suppose if any big positive comes means, then a short covering rally will happen in the market. In the business line paper, that article has come today, because the FIs are still holding huge short position in the market. And mutual fund inflows, if you see that it has come down, gradually it is coming down. So last month it was around 17,000 crores, whereas the SIP flow is consistently going up only. Previously it was 26,300, and the last month it is 26,700, almost 300 crores it has gone up. So the SIP flow is there, whereas there is some redemption in the market on lump sum. That is why the overall flow is less than the SIP flow, almost 9,000 crores it is lower, because market has gone up. So somebody waiting to exit, they have exited. Events to watch: this geopolitical tension, then the US tariff news, that is one, and monsoon progress. So these three are very important, as well as the FIS action we have to see it. Okay, thank you.